Welcome to Business Talk with me, Michael Avery, here on Business Tech, South Africa's largest business news website. And we're talking all about banking and the pandemic today. And banks really are at the front line of the economic disruption brought about by the COVID-19 pandemic. Central banks, large universal banks, small to medium-sized banks, fintechs, challenger banks, all are facing unprecedented challenges and risks. They're also taking multiple measures to support their employees and customers and help bolster the financial system. Now, modern banking really has been characterized even before the pandemic by fierce competition from fintechs and technology giants, as well as changing customer expectations. We want more from our banks in this era. I think banks are increasingly looking at how they can leverage technology to modernize themselves and deliver on a high-touch, more personalized service. Difficult to do when you're dealing with historical legacy systems. But so far in South Africa, we certainly have seen some very prudent provisioning, and that's certainly led to better than expected results as the pandemic eases. Well, to talk about how banks have fared during the COVID storm, it's a great pleasure to welcome now Marius van den Berg, who is EY Africa Banking and Capital Markets and Consulting Leader. Marius, welcome to the show.
Thank you, Michael. Nice to be here with you today.
Now, can you just talk a little bit about this accelerated adoption of technologies by local banks following the outbreak of COVID? Have we seen local banks successfully navigate this incredibly difficult period?
Michael, I would say, looking back, the pandemic has really shown or proven that our South African banks are very resilient. And I think the banks overall have transitioned to a new way of working very effectively. I do, however, also think that the pandemic was almost like a catalyst for some when it comes to the use of technology and the digital agenda specifically. I think for banks that have already been on the digital journey before the pandemic, that has really placed them in good stead when the pandemic hit. And I think, if anything, has just accelerated some of their digital initiatives. At the same time, I think for those that had not yet embarked on some form of modernization or digital initiatives, I think the gap has started to show, and it's really shown up how much work that they still need to do. As you correctly said, I think banks have been on the automation drive for a long time. I think what the pandemic has done has really given banks the opportunity just to take that step back and think about where they can do things differently and even maybe do more in the digital journey. I think what we've seen over the pandemic, many of the banking customers have been shifted to the use of more electronic channels. And I think that's obviously been great. Something that banks are battling with for a long time is how do they get the client base to shift to digital. I think the pandemic has helped to enable that shift. The key now for the banks going forward is going to be, how do they sustain that stickiness? How do they keep the clients on their digital platforms going forward?
Yeah, and I suppose to do that, you've got to keep delighting your clients. And people have this expectation, a very high touch expectation from the way we deal with big tech and the way that gives a completely seamless user experience. I think what the banks perhaps have struggled with is providing that same experience with legacy infrastructure. And there's also a balance here between, on the one hand, accelerating innovation while improving cost efficiency at the same time. Are banks getting that particular balance right?
I think, Michael, the sort of drastic advancement in technology and the increasingly customer expectations that you're referring to, I think has sort of given the banks the real opportunity to, I guess, accelerate some of the things that they've been doing. I think a lot of the focus historically has been on providing a digital experience. So that front end customer side, better apps, better engagement with the bank. And I think the banks to a large degree have progressed quite a bit around that and getting a lot of that elements right. I think where the opportunity for improvement still lies is, how do the banks become digital at the core? And what I mean by that is, how do you transform your whole operating model, not just from the customer front end, but right up to the back in terms of the factory inside. Yeah. And I think that's where some of the work still lies ahead. And I think increasingly we're hearing how banks are talking about what does the future of the finance function look like, future of HR, future of risk. How do they use technology in all the different components of the bank? And I think that's where the shift needs to come. It's sort of not just the client experience that they offer and digitizing that, but sort of transforming the whole operating model and making digital tools front and center to that.
And how do you
clearly
do
that will benefit clients at the end.
Yeah, absolutely. It's about digitizing those cogs in the machine of the bank. We have some first movers. I know Nedbank, I was chatting to Paul Morley the other day, taking the entire architecture into the cloud and being one of the first movers in that space. It obviously comes with challenges, and sometimes you want to be maybe a fast follower than the first leader, because you can make mistakes as well. But I want to move on to the issue here of the human cost of all of this innovation, this digital innovation. And I think there's a big concern, specifically in a country like South Africa, with our high unemployment levels, around job losses, around this human versus AI interaction issue. How do you see that tension playing out?
Yeah, Michael, I guess that sort of question comes up so often: is the machines going to replace the humans? And I don't necessarily see it in that way. I don't think it's necessarily replacing one with the other. I don't think it's a question of taking a salary cost out of the income statement and replacing it with a technology cost. I think it all becomes more about the appropriate use of resources. And I think what we've seen in terms of the use of things like artificial intelligence and robotics, it's really the most effective use there is to do some of the mundane type work. So the information gathering, some of the basics, so that you actually enable the human side of things to apply their minds, to do the strategic, the thinking part of it. So I don't think automation and the use of technology needs to lead to any form of job losses. But I think if we work smartly, we can get our human resources to actually apply themselves more and leave the technology to do some of the routine type activities.
Absolutely. So you're replacing the mundane and not displacing the human in all of this as well. I know initially when we look at things like AI and the early use of things like chatbots, some of them didn't withstand the kind of user experience. Some of them tended to have potential biases that were hidden or encoded in them. Have we seen AI standing up to the task during this period of really rapid transformation where things have moved very quickly?
Michael, I think we've seen some really significant enhancements in the technologies that are being used. And I think there's still a long way to go. And I think we'll see even more progress coming. But I think definitely the pandemic has shifted a lot of focus on the use of technology. And I think technology has been key in all of this. And I think it's also driven more investment into these different areas. So I think some of the teething problems we've seen before, I think you probably see some of that still coming up. But I think a lot of that has been dealt with. But I think probably more to come. And I think the pandemic has really been great for organizations to really look differently at how they leverage technology and how do they improve on some of the things that they've done before. So they may have had a hiccup before on a chatbot where it was not as fundamental to the business operations. In the models that they operate today, it's key and front and center. So you actually can't afford any of those hiccups anymore.
To come back to what you said earlier about banks looking more internally, about how they can use technology internally, what are some examples of where banks are looking to improve efficiencies and systems inside the bank using technology?
So, Michael, I would probably say that's sort of threefold. I think the three that's sort of top of mind for me are very often the finance function. Where there's often been some lot of legacy systems and there's views around how can we modernize and actually bring digital to the finance function. Probably the second area I would say is in the risk area, where technology is more being used for greater coverage in some of the models that is being run. And I think I would probably say in the HR space, I think the use of technology in terms of how we engage with our workforce is probably the three areas that come to mind for me at the moment. But probably by far, I would say the technology for risk and technology in the finance functions is probably top of those for me.
And big opportunities there for banks as they look to build out technology into those areas into the future. Now, I know, speaking of building, there've been a lot of digital-only banks being built in the last few years, the likes of Discovery Bank, Time Bank. We're still waiting for Bank Zero. What have they had on the market? I think both have had sort of varying degrees of success. And at what cost, if any, to the traditional banks?
Michael, I think that's an interesting question, and I guess it's still some early days, I guess, for many of these. But I suppose in my mind, the new entrants or the digital-only banks, as we're referring to them, I guess sort of face a set of challenges, and maybe the traditional banks face a slightly different set. I think that the digital banks, they've got the benefit clearly of not having any legacy systems to deal with. So a lot more agile, a lot more able to respond and make their customer service a lot more specific. But the challenge that they have, they don't necessarily have a big client base yet. Yeah. So their focus has to be on building up that client base. However, if we then look at more the traditional banks, they've obviously got the established client base, but they have to deal and navigate this legacy, and how do they modernize that? And I think for me, the winners out of all of this is going to be the guys that sort of emerge from this, navigating those challenges that they face the most successfully or the quickest, I would say. But I think a very interesting time, and a very interesting time to watch.
Absolutely fascinating. And especially with things like open banking, and you're opening up your bank and your brand to these other players via open API. And you, as a user of maybe a SnapScan or a Zapper, might not then interact directly with the bank brand. And the old days of drawing money from a branch, you would have the bank brand right there. So I think banks are going to have to think long and hard about how they reinforce that brand in the eyes of the consumer as well. And I also suspect that these types of banks, if we look at the upstarts, the new digital-only banks, will only open the door for additional niche fintech startups. We're already seeing this in funds and investments, in insurance and home and vehicle finance, and in life insurance and pensions. Do you see this just accelerating all of these insurtechs and fintechs coming into the market?
Most definitely. I think the line between what was banking and what is a technology provider, that line is starting to blur. And I think, we've seen a number, as you've highlighted, a number of new not just banking licenses being granted over the last couple of years. We've also seen the new entrants coming into the market. I guess over the last 15 months, we've realized that we need access to a banking system. We need access to a payment system. We don't necessarily need access to a bank per se. And I think that's what that realization is I think really now going to also help opening up to other players coming into the market that can fulfill some of those components or those services that a traditional bank has offered in the past.
Now, what does that mean then? Because we had a recent business tech poll showing that less than half of respondents have actually been to a branch this year. So what does the bank of 2025 look like?
So now you're asking me if I've got a crystal ball, right? So, if you just think about banking as a service, if we think about artificial intelligence that we've spoken about, robotics, voice banking, etc., it almost feels to me that the bank is becoming, if I can use the word, become almost invisible. It's becoming part of parcel of every single thing that we do. So if I had to look forward and sort of take out the crystal ball, I would say that trend's probably going to continue. We're going to see a lot more other role players coming into the market. And you're almost going to see, I think, a bank becoming a superstore of sorts, that you're going to go to them, shop for what you're looking for, but it's not necessarily going to be a service or a product that they necessarily offer themselves. It's just an access point to get to the service or the product that you are looking for. I read recently in the World Economic Forum report that about a third of their respondents said that almost 50%, they would expect almost 50% of the financial services needs would be met by a technology company by 2025.
Wow.
So again, talking about just how these fintech players are coming into the market. And I think if you could look at that sort of banking spectrum and value chain, I think we'll see some of these non-banks start dominating some of those segments. Yeah. And then clearly the banks will own certain others.
Yeah.
And I think and that comes back to the whole starting to progress on the modernization, digitalization journey. I think for banks is really to embrace some of this if they want to start remain relevant as the times progress.
And I've always seen, the bank's big strength is the fact that they interact with their client base more frequently than, say, if you're an insurer, where if you're interacting digitally, you might only interact when you've got a claim, which is hopefully not very often. Whereas I go onto my banking app almost daily. So they've got that competitive advantage. If they're going to build out and be more of a platform type business, they do have that as a head start, shall we say, on potentially a few of their competitors. Now, when we look at customer loyalty in this new environment, I think opening and closing a bank account has become a very simple process. Do you think this is going to lead into increased churn in the market, less customer loyalty? How do you see that playing out?
Michael, I guess it's always scary to talk about customer churn. I think back when we measured how effective the banks were in opening a new account by measuring the time that it took. These days, it's the number of clicks that it takes, and if you can't open an account within 6 or 7 clicks, you're not seen as being having an effective onboarding process. And I think that sort of really talks to exactly your point. Is that I think that just creates the opportunity for more entrants, but also for you to even interface with even more financial services providers. I think all of us already have multiple bank accounts, but I think I'm going to see this trend continuing. There's definitely, I may not go and close any of my accounts, but I'll definitely add to that portfolio because somebody's going to offer something very specific that I need that my conventional bank or my current bank does not provide me, and I'm just going to add that to my portfolio. I think that's probably going to be a trend that we're seeing continuing into the future. So I think it's going to become a lot more competitive.
A lot more competitive, a lot more interesting, a lot more value for consumers as well, and a lot for banks to think about. Marius, thanks for making us think and for gazing into your crystal ball with us here on Business Talk and Business Tech.
Thank you, Michael.